Hello, everyone. Welcome to another edition of Trading Bitcoin with your host, Tone Vase. Haven't done one of these in a while. Coming to you live from
Hello,
my
everyone. Welcome to another edition of Trading
Hugs
Bitcoin.
place.
Host Tone Vase. Haven't done one of these in a while.
Thank you, Willie. And coming to you live from London, England. I'm hanging out with my friend, Arthur Pug, and on Twitter, and coming to you live from his place. Thank you so much for hosting me. I just turned on the live chat. Almost had that turned off. Not sure why, but got the live chat going. I see the trolls in there. And let's welcome my guests for today. We got Willy Woo and we got Tyler Jenks. Tyler, how are you, man?
I'm doing great. It looks like you've got a nice chess set behind you. Leah and I are getting ready for a redo of our workshop on hyperwave that we did at Unconfiscatable. It's coming up next week, Saturday and Sunday. We've divided it up into 2 4-hour segments. And anyone that missed us in Vegas can watch it on the webinar Saturday and Sunday from noon to 4 o'clock Eastern time. It'll be exactly the same thing we covered, but we've got 25 new hyperwaves that are active right now around the world that we're going to go into in a lot of detail. So the first day we'll just do all of the rules. Here's how it works. Here's examples of it. And the second day we'll go into how you trade them using Consensio and some other things. So it should be a lot of fun. Anybody that can join us, just go to Lucid Investment Strategies and you can sign up right there. Willie, good to see you.
Yeah, very cool. Very cool. I should probably sit in on that as well.
Hey, Tyler.
I caught about half of your hyperwave in Vegas. I had other stuff I needed to get done. But I'll be in Thailand, so it's going to be tricky. It's going to be the middle of the night for me, and depends on what I'm doing. Since it's Thailand, I might be out. Willie, how you doing, man?
Good, man. I just arrived all of like 1 hour in Koh Samui, Thailand. Ready to meet you in a week. Yeah, been good. I've been really busy. Just beavering away, working a whole bunch of new stuff and research. So yeah, been quite busy.
Yeah, guys, I'm getting ready to, I'm off to Ukraine tomorrow. And after Ukraine, I am off to Bangkok to speak at Traders Fair. I'll put up the link a little bit later. And after that, I am going to meet up with Willy Woo and Van Zen. It's our like twice annual reunion in Thailand, right? So we did this back in October. Now we're doing it again here in like late February. And we'll probably do it again towards the end of the year. So about twice a year, I like meeting up with these guys. Oh, and for those of you that didn't notice, I'm wearing a really cool shirt. This was given to me Unconfiscatable. It has all of the shit coins you know and love in a beautiful shit emoji. So this is absolutely perfect. I'm really thinking of doing one of these on my own with some of my favorite altcoins. I haven't been able to find Paycoin on this yet. I thought I saw Aurora coin. So some of my all-time favorites are on here. Oh, Token Pay is on there. Beautiful. Obviously, Ethereum and Litecoin, which we're going to probably talk about today. All right. Let's jump into it. Let's go to screen share. And again, thank you, Arthur. He's going to keep an eye on the live chat and the questions. My hair is growing back. So guess what? I'm traveling for the next 2.5 months. And if I don't want to cheat on my barber, the Tone Vase classic haircut might be back by the time I swing through the US again. So we'll see how that goes. All right, screen share, where are we going here? All right, tonevase.com. So the lovely Daisy, our photographer, she has given me all the pictures from Unconfiscatable. There's an unreasonable amount of great pictures. We will get them all to you onto this website soon. It's not on there yet. Really important, guys. I have changed my travel schedule around, and I will be going to India, assuming I get my visa stuff done. I was looking at it today. For those that don't know, about 20% of my time, all my time, about 20% of my time is spent on travel logistics, visas, Airbnbs, deciding where to travel to, talking to the people. Do I want to speak at their conferences? Booking flights, rebooking flights. 20% of all of my time is spent on travel logistics. So this morning was spent on trying to figure out how to get a visa to India because I'll be there in 2 weeks. But we will have a workshop in New Delhi, and I will be going after India. I will be in Vienna, Austria, and then Hong Kong, and then back to Europe. I travel very efficiently, as you can see, from the back and forth. All right. That's it. You can check out my travel schedule on my calendar. This is still a work in progress, but you can see the conferences. This is Traders Fair. This is where I'll be speaking on Saturday. Saturday actually. Next a week from now, and in Bangkok, and then that's how I'll be meeting up with Ven Zen and Willy after. And my workshop will take place the day after on Sunday. A few people have already signed up. All right, let's go to the charts. Let's take a look at Bitcoin first. Oh, I got all these notifications. The London workshop yesterday went great. Thank you guys for attending. It was awesome. Nice packed crowd, and we went over a lot of stuff. The monthly chart. Oh, I really want to talk about the long-term view of Bitcoin. This is probably a good show to talk about the long-term view of Bitcoin. So let's do this backwards, okay? Let's do this backwards. Let me close this. Let's do this backwards. Let's go through the small time frames first, and then we're going to spend most of our time on a long-term outlook. So the smallest time frame of Bitcoin I have is the hourly chart. The last time I did this show, this was very kind of borderline funny. So the last time I did this show, I think it was a few days ago from the conference, as I was interviewing guys like Danny Brewster and Nicholas Dorier and Nopara. And we were over here in this area here of 3,400. And I said, hey, watch the hourly chart. The hourly chart is coming up on a 9, and then the momentum will probably end. And then I had no idea that the next 3 hours, we're going to pump Bitcoin $400 all the way to 3,700. But the beauty of it is, because the sequential system is time-based and not price-based, it literally called the top absolutely perfectly, right? Wow. So on the hour, and in my last video, we were here, and I'm yeah, you got about 3 more hours of upside, and then the momentum is gonna end. And technically I was right. I just had no idea that the next 3 hours were gonna be, such a freaking monster. So this looked like a bullish pennant flag for part of the day yesterday. This has already extended way longer. This is now starting to look like one of those bar patterns. And the most likely outcome from here is probably a big drop, but we don't know, right? No one really knows. But as you can see, we are almost at a brand new low close based on the hourly chart, and that is pretty bearish. Okay, so it's pretty bearish over here. Yep, there it is, and there it is right there. That tick, the tick that just took place was the brand new low close, assuming the hour closes this way, right? So assuming the hour closes right here, that's a brand new hourly low close. That's not a good sign. It's possible we could be at least correcting back down. That's the hourly chart. Anybody want to comment? I do want to scale my way up to the monthly chart, and I want to spend most of the time on this podcast on the bigger picture.
Yeah, just very quickly for me.
I was.
Go ahead, Willie.
Okay. I was very much short leading up to about 48 hours before that pump, and it was like as it was going lower, there was just a lot of buying, and then the volume started picking up, and I ended my short and went long, and I had no idea that would go that powerfully, and I thought that this would consolidate and continue up, maybe a little bit more to 4,000. But right now, I'm monitoring the order books live, and a lot of the buying power is just pulling back right now. And so I've just gone short. I don't think that we're going to go any higher. Yeah. And ultimately, I still think a little bit longer term, this 3,000 support will eventually fail. So that's kind of like my keystone.
Yeah, I would agree with Willie almost exactly, and with Tone. The next move to me looks like it's to the downside. To me, this was just another one of about 20 candles like this that we saw on the 9 that we've seen over and over again in the downtrend. I don't believe it is capable of getting back to 4,000 or 4,200. And I think the incoming is going to be testing the 3,100 lows, and they will not hold, I don't believe, this time. And we should be in the $2,800 to $3,100 region fairly quickly.
Yeah, and I just noticed it wasn't just a 9, it was actually a 913 on the same candle, which is extra bearish when you hit that candle. Now, this is not a typical candle you get your 9s on, but hey, like I said, this is a time indicator, not a price indicator. Okay, the 4-hour chart, the CMF on a 4-hour chart looks awesome. The 4-hour chart is kind of is back in a bearish posture. So you did get a red 2 below a red 1. Now a red 4 is crossing below a red 3. The 4-hour chart is in a brand new low candle close. Once again, confirming the hourly chart that the posture is now bearish. If this thing was going to go higher, I think it would have done it about 12 hours ago, 12 to 24 hours ago. It really needed to break out earlier. Now, during class early yesterday, I did draw one of these triangles because it was in the middle of the day. So I drew one of these bullish pennants, something like this. And during the workshop, we were looking at this, and we were doing some live trading, and we were looking to trade the breakout out of this pennant. But when it didn't break out and it kind of got stuck through here, I think the class had already ended by this time. So during these last couple of hours of the pennant, we were trying to time the breakout during the trading course, but it didn't break out. So that was unfortunate, but that's when it should have done it. And now I think it's a little too late. Okay, the 4-hour chart is looking bearish right now. So we're back under 3,600. I think we're going to correct for the majority of this. Now, I think the bullish case still has a chance. And so there's always a chance, right? There's always a 10% chance that we're not going to see sub 3,000 for months to come. And the only way that is going to happen, I believe, is if Bitcoin holds a prior high. Now, it can't hold this prior swing high. So I guess the most leniency I can possibly give Bitcoin is this line. So if Bitcoin holds and bounces off of this line strong, it is possible that we will make it to 5,000 before sub 3,000, which I still believe is possible. This is why I want to spend the majority of the time on the bigger picture. Any quick comments on the 4-hour chart? I want to move up in the timescales.
Just one comment comment. It still looks. Go ahead, Willie.
Sorry, I was just saying the live chat's disabled, Tone. Do you know that, or is it meant to be?
No. It was disabled. The live chat is enabled. You probably have to refresh your browser.
All right,
Right.
sorry about
It was initially disabled, but then I enabled it. But if you had it open beforehand, then you
got it. Cool.
Yeah, on this chart, the 4-hour chart looks a lot more bullish to me than the 1-hour chart does. I could see a pullback a little bit lower before an attempt back to the upside. I do like the volume, the way it looks on the 3 large bullish bars that we had that took us up this high. I like the fact that on this pullback, the volume has disappeared. We could find support around the blue descending line before going higher, but it's got to do it very quickly, and I don't expect it. I agree with Tone that the blue line he just drew in is sort of the last chance for this to bounce, but if it gets down that far, it's going to destroy the basic formation from that volume pattern holding above the descending blue line. So to me, even this doesn't look very promising.
Willie, any thoughts before we go to the 12-hour?
Yeah, the short range stuff isn't really my thing, but like my sense is if we go down too quickly, it wouldn't be in keeping with Bitcoin's fractals. I kind of think we'll be choppy for a bit, sideways choppy over the next few weeks before we're ready to come back down. And I'm not sure what the target is on the high end.
Yeah, I will say that the volume that showed up the other day is legitimate volume. It is true buying. The CMF reflects it, the volume spike reflects it, and there has not been significant selling yet off of that. So we will see if this amounts to something. The 12-hour chart is going to give us a daily golden cross, but right now we are on a price flip, and the next 12 hours will probably give you a short sell signal. I do want to jump to the daily chart. That one is probably a little more relevant. See, once you start zooming out, this move becomes less and less relevant, right? Like here is the daily chart, and this upswing is not that much bigger than the drop that we had on January 10th. And we're just sitting at the base of that drop that took place on January 10th. And we're still under the short term, the 50-period daily moving average. So when you look at it from a daily perspective, this is really like nothing to write home about. And this is already the second day of no follow through whatsoever. So this just gives, the daily chart more chances to consolidate at the lows before another drop lower, in my opinion.
Just to add to that, because a lot of this volume I don't really think is legitimate until I see it on chain. So I'm just checking it right now, what the on-chain volume is going. Because if it's not clearing onto the chain, it's not solid volume and going to wallets. It's not HODL longer term holds. It's just trader gains, and right now I don't see much in the way of volume on chain. It's delayed 24 hours before the data comes in. But as of yesterday, which should have included yesterday's trade, it's just business as usual. So I think this is just short-term exchange trading dynamics.
Oh, yeah, no, I agree with you there. But yeah, so I don't really pay attention to on-chain volume. But thank you, Willie. And I'm glad to have you on the show for that. Okay, so now we're going to move on to the weekly. And this is where I want to spend most of my time. But maybe before the weekly, now I heard, because again, I've been busy between the conference and the workshop. Everything I heard was that apparently Litecoin was the reason for this. And I do want to take a look at the Litecoin chart. load chart layout. Let's take a look at Litecoin. What the hell is their ticker? LTC. Okay, so I have Litecoin versus Bitcoin last looked at on the 1st of January. I have Litecoin versus the dollar on a weekly scale. And the last time we looked at that was, wow, in July of last year. Really? Wow, that's kind of impressive. So I haven't seen it in almost 6 months. So here is Litecoin. Oh yeah, it's been ages since I looked at Litecoin. It doesn't have the right moving average setup. It doesn't have the right sequential probably. Let me get the right indicators on here. Favorites, that's the indicator. Sure. And forecast moving average, and we're good. Okay, so here's a Litecoin pump in terms of Bitcoin. And I mean, Litecoin got really beaten up. Wow. So Litecoin, oh, this is the daily chart. We'll take a look at the weekly as well. So this is the daily Litecoin chart. And in terms of Bitcoin, I mean, it made it to a double bottom almost perfectly. I mean, this thing is supposed to go lower. I don't believe this will last. I don't know where it's going to top. To be honest, I don't really see any resistance here. I mean, it broke down from the triangle. It is kind of leading the way. I mean, Litecoin has been in an uptrend since the 12th of December. If we compare that to Bitcoin, that's about the same actually, but Litecoin has been in a bigger uptrend. So according to the daily sequential, we are at a sequential 13 with a 4 on the setup. So this is a 50-50 shot if it's going to go higher. Now, I don't know what you heard, Willy, but I haven't really been paying attention, but I heard something about Lightning wants to implement Mimblewimble, which means Litecoin is going to hard fork. Now, from a theoretical perspective, from an economic perspective, from a consensus perspective, this is ridiculous. Everyone should have been selling Litecoin, not buying it. This shows you how, I guess, what's the proper word for it here? This shows me how, I'm trying not, it shows me how stupid Litecoin people are. I mean, I was trying to think of a better political term, but I can't.
Counter indicator? Counter indicator.
Right. Like it shows the stupidity of Litecoin backholders, because in order to implement Mimblewimble, you pretty much need a hard fork. It's as far as I understand the concept, it's a completely different like consensus mechanism, right? It's a different code base, right? So if your coin is able to hard fork at will, it's freaking useless, right? So by implementing privacy in the form of Mimblewimble, you're showing the world how centralized your cryptocurrency is. There's no decentralization here. So, and just because Litecoin is doing all of the stuff that Bitcoin does first, you know, they activated user-activated soft fork first. They got SegWit first. They executed the Litecoin transaction first, right? And everyone was like, oh, that's a use case. Litecoin is a test net for Bitcoin, but that's not investable, right? Like, it's kind of like, you know, instead of investing in Tesla, you're investing in crash test dummies, right? Because like, I mean, look, they're kind of useful, right? I mean, Tesla has to buy crash test dummies in order to, you know, show that their cars are safe. But it's not exactly an investment in Tesla by investing in crash test dummies, right? Or investing in Tesla cars that Tesla is going to purposely crash in order to prove that they're, have safety standards, right? So, I mean, I'm sorry, guys. Litecoin's use case is not an investment strategy. I don't know what Tyler thinks about this, and then we'll go over to Willy.
Well, that's one of the best metaphors I think I've ever heard. Instead of stupid, I was going to use the term ill-informed, because you just described exactly the difference between probably one of the best crypto coins in terms of the usability of it as a proving mechanism for the real fundamental case, but not the fundamental case. And I love the example of Tesla and the crash dummies. That's perfect. You need those, and you need people to build them, and you need them to have sensors all over them to tell you where the weaknesses and the strengths are, and what body parts are going to be hurt or destroyed at various speed limits, on and on and on. But that's a very different case than the fundamental case of an unconfiscatable coin with an absolute limited supply, with a complete decentralized governance. And so ill-informed, I think, is a better way of putting it, but that's a great metaphor.
I'm looking at this. There's a lot to talk about here. Ill-informed. Well, first off, is Litecoin as a test bed for Bitcoin? I think it serves a legitimate purpose there, and it's useful for the ecosystem as a whole. I like that back in the day when Bitcoin was just Bitcoin and Litecoin came along, Bitcoin did need a trade pair. So you can look at Litecoin as a kind of more of a speculative currency, and you'll get a lot of amplification trading it. And, Litecoin is really centralized in its holdings. So there's a lot of whale hands that I suspect control the market, as you do whenever you hold a lot of ammo in a coin. I'm not sure what is causing this buy, but to me, if there is this kind of excitement over implementing, I'm just reading the articles here, confidential transactions and then exploring Mimblewimble, like I wouldn't be surprised if whale hands are thinking to drive that up and then cause a little bit of FOMO. And then the price runs up and then you dump on it. And I have friends that have made a lot of money by trading stupid, as in smart stupid. They think how stupid people would trade, and then they buy in before they trade to sell on the top. So I think some of that stuff's happening in this Litecoin market. And as far as the I'm just looking at this as like, I'm not sure. It would probably be good to get Charlie on the show, because I'm not sure if you need to hard fork this, because he's talking extension blocks. Does that require a hard fork? When I heard about this Mimblewimble, I thought like they'd be doing a side chain.
Yeah, no, extension blocks do not require hard fork. Extension blocks do require
exactly what they're looking at.
But extension blocks come with their own issues, which is why they were very frowned upon when they were suggested for Bitcoin. I don't really know the details. I don't think Charlie likes me very much these days, so I don't think it'll be hard to get him on. I don't know. We'll see, maybe. But yeah. So, but looking at the technical analysis one more time, I'm looking at the weekly US dollar amount, and this $50 is formidable resistance. You just ran into a triple resistance cluster at 50 bucks. So if there was ever a time to sell your Litecoin, and I should probably check how much Litecoin I have in my phone, actually. Give me a second here.
While you're doing that, Tone, just a couple of comments. One is one of the people in our hyperwave research group who is very adept at trading, and he just hit a home run by going long Litecoin over the last couple of weeks. And my comments in terms of short and intermediate term trades on cryptos, I don't do it, but a lot of people do it very, very well. I'm not saying you can't make a lot of money. I'm interested in the big picture having to do with what potentially Bitcoin could do on the world economic stage. And so I've been out for over a year now. I intend to be out for a good time longer. But those that, as Willy said, are good at understanding or adept at understanding short-term trading strategies, no question, this is a playground for a lot of good traders, and you can make a ton of money. The second thing I would say is that this same individual pointed out to me that out of all the cryptos, the only one that I would consider close to being or having gone through a hyperwave is Litecoin. And you can almost put the Litecoin chart up against the long-term Bitcoin chart, and they're almost identical, but it is not a hyperwave. It's missing one of the phases, but every other crypto that we've taken a look at doesn't come close to qualifying. And I won't get into the details of that, but so Litecoin as a trading vehicle, I think is a wonderful trading vehicle. I also agree with Tone, though, that this move up to that 50 level is very ominous. And that doesn't mean it can't be taken out. But with what we've just said about Bitcoin, I would doubt it very much. Litecoin is not going to run counter to Bitcoin. It will for short periods of time, but they both started this move at the same point. Litecoin wouldn't be going up if Bitcoin didn't have the movement that it had in it. It can for hours or even for days, but nothing significant. So if we all agree that Bitcoin is looking weak on a short to intermediate term basis, and I believe still very weak on a long-term basis, then anybody that has been playing Litecoin to the long side, I think this is a perfect place to be stepping out.
Yeah, no, thanks for that, Tyler. And I did check. I am in possession of 2.25 Litecoin, so it's definitely time to sell and buy a couple of nice steaks over the next couple of days. So
I was just messaging a friend who has a lot of Litecoin.
What's up? Say again?
I was just hearing that solid 50 resistance. I was like, maybe you want to listen in on this channel right now.
Yeah,
sorry.
So this 50 was a support point for approximately 3 months or even longer than that, right? So from August till November, the 50 was a support point. So, I mean, Litecoin has been leading the way a little bit, with Bitcoin. Litecoin broke down in mid-November from the $50 point and went all the way down to $23. So Litecoin fell more than 50%. If we compare that to Bitcoin, this is where it starts to get interesting, right? If we compare that to Bitcoin, Bitcoin also broke down on the same week. These are both weekly charts. Bitcoin also broke down the week of November 12th. Now, Bitcoin did not fall over 50%. Bitcoin broke down from 6,100 and it fell to 3,100. So Bitcoin fell just above 50%. Bitcoin fell like 48%. Now, during that time, Litecoin, the low in Litecoin came in at 23 from 50. So it fell more than $25. So Litecoin fell about 55%, okay? Now Litecoin has rallied all the way back to the level of the breakdown. This is a triple resistance cluster. It's a moving average resistance. It's a prior low resistance as well, right? So this is a pretty big resistance cluster. Now, you are absolutely right, Tyler. There is nothing wrong with trading Litecoin. You can trade Litecoin, to earn more money. But again, going back to the analogy of the crash test dummies, there is nothing wrong with trading the company, a legitimate company that makes crash test dummies. I'm just saying crash test dummies is not an innovation like cars or electric cars, right? Like Litecoin will not lead to any significant innovation. That's what Bitcoin will do. But there's absolutely nothing wrong with trading it for more Bitcoin. My problem is not with the traders of Litecoin or Ripple or like outright scam coins. Like, I don't care if you trade them. My problem is the people that are trying to convince others that Litecoin is actually viable into the future, that it's actually going to be, Bitcoin will continue to separate from Litecoin over time. So my problem isn't with people that are trading, and Litecoin is like the least problematic of all of the altcoins, right? My problem is with people that think that, like, I don't know, we can name currencies all day, whether it's Ripple, whether it's, the token pay scam, whether it's the useless digibyte, it doesn't matter, right? My problem isn't the people that are trading them to get richer. My problem is the people that are trying to create other bag holders by unloading this onto them, and then whether they know that it's a useless token or not. And so one last thing, and Litecoin was very tradable. Look at the 913 buying opportunity right at the low, followed by a beautiful doji reversal candle. Like TA on Litecoin, at least the TA that I use and the TA that I teach, the weekly candles could not telegraph a low any better than it did in early to mid-December for a trader.
Yeah, just around this, I don't actually think it necessarily, it's about the innovation anymore in terms of Bitcoin versus Litecoin. The role of Litecoin is actually to do the bleeding edge innovation. But when you are looking at store of value, this goes back to a lot of Murad's work, which is what are the properties that give a coin or a network a good store of value long term. And a lot of that stuff requires super conservative approaches, and you need to be very, very smart in rolling this out. And the reality is that Bitcoin's about the most careful in its approach, and it's had almost a 10-year Lindy effect. The thing that has been working for 10 years, so there's more chance it'll continue to work that long in the perception of people's minds. And that means more money goes into it. And the reality of when you jig these equations and calculate them out, utility counts for very, very little of the valuation of the coin. So really what you're left with are these networks being just buckets in which we pour value into. And you really want to make sure these buckets don't leak. And yeah, just I've run the analysis across,
Oh, do we lose Willy?
And it's interesting because these things amplify Bitcoin. Right? You there? Say yes.
Yeah.
Okay. All right. So altcoins amplify Bitcoin, no end. They amplify both ways. So in a bull market, I'm okay with diversifying into altcoins to get alpha on top of Bitcoin. But you have to be careful with that. And also you have to consider liquidity, because some of the stuff is going to leave you high and dry when you want to get out. And so, you know, Bitcoin has that kind of volume and liquidity that like a large fund manager can come in and come out of. So if you've got a smaller portfolio, altcoins are okay. But yeah, if you go to the big backtrace over 10 years, and you can do this for Litecoin, it does not get alpha over Bitcoin. In fact, you get more risk and volatility. And like every other altcoin, the risk-adjusted return is lower. So if you're in terms of hodling, it's just, you don't have to think too hard about it. You just buy Bitcoin. And if you're speculative, then yeah, this stuff is a good vehicle.
That's a great point, Willie. Great observations. This is very, very important, I think, for all listeners. I've traded gold and gold mining shares along with silver mining shares for 40 years. Where gold goes, that's where all the mining shares go eventually. But they do it anywhere from 1.5 to 3 times the amplitude in both directions of the underlying price of gold. But if gold is in a bear market, all mining shares are going to be in a bear market, with some very rare exceptions where some new discovery or some new buyout of another mining company will momentarily move the price opposite to the main direction of gold. And there are people that can trade that and make an enormous amount of money, a lot more than they can trading gold on an unleveraged basis. That's what we're looking at here with cryptos in general, but the top 50 cryptos specifically, that if you do any kind of analysis on the movement of their prices relative to Bitcoin and up and down markets, and I'm talking about long-term trending markets or intermediate term trending markets, you'll find that the same relationship holds anywhere from 1.5 times beta to Bitcoin, up to 3 and even greater than 3 times. But that doesn't have anything to do with the underlying fundamentals. It does have something to do with the underlying fundamentals of ill-informed people that believe that cryptocurrencies are to Bitcoin the way mining shares are to gold. And that is incorrect. Fundamentally, there's very little in the crypto space that has fundamental value other than Bitcoin. Whereas in the mining example, all of the profitability and all of the reserve and all of the potential cash flow comes from the value of the gold that is being mined. And therefore, all of the expenses in terms of exploration and actually building the mine and doing all of the regulations in the countries that need to be done have to be taken into account for each of those mining projects. None of that analysis is necessary for cryptos. So this is a great example of something that for a period of time is going to give short-term traders a huge opportunity, but you've got to keep in mind the underlying fundamentals of what Bitcoin is doing and base all of your decisions on that.
I'd say Bitcoin is the biggest bucket by far, and therefore all the altcoins are correlated to it. I wouldn't go as extreme as saying it's the only one that's capable of holding value. Obviously, it's all these coins are holding value right now because they're worth something. But it's always going to be the biggest value that the biggest bucket of value that drives all the other buckets. You know, so for example, if Bitcoin's going to crash, everything, this whole sector of crypto is going to go down because everybody's going to get out of it and go into fiat or real estate or wherever the next cycle is booming. So yeah, like I could totally see there is a future where there's other strong buckets that hold value, and I'm not so I guess blind to new things coming, that Bitcoin will always be the biggest bucket. But right now, there's nothing in the horizons that I've seen that has had its 10 years of history and the solidity of the developer team. This thing hasn't leaked as much as other buckets, is all I can say.
All right, so I agree with that as well, and that's why we saw all of the Bitcoin crash and everything else crashed more in the middle of November. But Tyler, you got us onto gold, and we talked about gold at length in a podcast about a week ago, and I was very cautious because it was on a weekly 9. We've pulled back a little bit. What are you thinking here on gold?
I think there's better than a 50-50 probability that gold is going to go higher from here. The fact that we were able to take out that very long downtrend line tells me that something important is happening. The fact that the moving averages have flattened out and have turned to the upside and price is above all of them, to me, is very important. Now, I'm not putting it at 70 or 80 or 90% because of the fact that we are on a 9 on a weekly basis. I like the way that after the initial pullback during the week, we came all the way back up. But it's still too early to get aggressive on this trade. It's just that I did not want to be completely out of the trade when my Consensio system is pointing to the upside. It would not take much from here to get above those tops at 1380, and then it's off and running, and then you're going to chase it. And I would rather have my toe in the water. So we got in with 5% weighting in gold itself and a 5% weighting in gold mining shares on that break to the upside above that trend line. And now we'll just wait and see. I'll be perfectly happy to get out of those trades if this 9 develops into more than a 1 to 4 period pullback. And that's kind of the way I'm looking at it.
Yeah, no, and I'm looking at it as well. I'm looking at this 1 to 4 candle pullback, and then we will reevaluate and let's see what happens. All right, real quick, let's look at the stock market, and then we will get back to the weekly chart of Bitcoin. I continue to be a little bit cautious on the stock market, mostly because of this, now we didn't actually get a 9, and I checked it on the daily S&P cash market as well. We had just missed a 9. Now, this is where it gets a little bit tricky. Like Tom DeMark himself had come out and said that he is looking for a top right here, but him, probably just like me, was anticipating an actual 9 print, like right here. We had a clean 9 print back in November, a very clean 9 print, and that led to some significant downside. This top was not breached on a secondary run-up in December, led to some serious downside. On a daily scale, if I pull this back a little bit and I magnify this chart and I get rid of the oscillators, the daily scale also gave you a 9 at the very top of the market that marked the all-time high in Bitcoin, which is, again, lovely if you're trading the right indicators. Now, this is the interesting part, right? Now, the anticipation was that this is going to be a 9, a printed 9. But it wasn't a printed 9. It was a price flip because the day was really, really bad. Now, thank God I advised everyone that was watching to get out on this doji and in preparation for this 9. This didn't end as a 9. And by not ending as a 9, according to the Tom DeMark himself and his rules, we should not be topping here. If for me, I mean, like the code that I wrote, or the code that I paid someone to write because I'm not that good of a programmer anymore, is telling you to be cautious off of this arrow. But in reality, a 9 was not printed. We are still in bullish momentum. And to me, as long as we hold the bottom of this horizontal channel, currently sitting at 26.25, I think we're still in a bull market, and I still think we can challenge it. The moment we break the top of this channel, the moment we can break above 28.15, I mean, I will be looking for imminent all-time highs in the stock market. I mean, sooner or later, this this government shutdown in the U.S., and I was in the U.S. for maybe a week this year, and I mean, like, as far as I know, no one is really feeling the government shutdown. It has made absolutely no difference whatsoever. I mean, once those people go back to work, I don't know what they actually did because there's no real impact here. I mean, the markets are going to be even more bullish. Like, I just don't see this global recession that everyone's scared of.
I'll just jump in for a second. I love this chart, the way it's presented, because I always look at trend lines, particularly horizontal trend lines, as being the difference between two different mediums, like water and air, the surface of the ocean compared to the air above it and the water beneath it. They have different densities, and that's why you get bounces off of support and bounces down from resistance. And when you get them in a channel like this, and you're eating through one density from a lower density, it takes time and a lot of power. And it also takes a lot of volume when talking about markets. And this one made it halfway up and then ran into resistance at the halfway point. So I agree with Tone. I would like to see assume a 9, even though it's not there, and then see a 1 to 4 week pullback, and then break up and take out the.
Wait, Tyler, this is a daily chart. Daily chart.
A daily chart. Yeah. Okay. Good. Same analysis exactly. Mm-hmm. That if we can go sideways to down, I wouldn't want to see us retest the bottom level of that purplish area, because that's too deep for me. That means what you're doing is the density of that range. In Bitcoin, it was 10,100 to 11,100. Here, it's very clear between 26.25 and all the way up to that top line, somewhere around 2750 to 2800, that there's something going on there. And we think of it in terms of supply versus demand, buyers versus sellers. You can depict it any way you want. I prefer to look at it as actual resistance to movement. And so if you can get up to the halfway point and rest a little bit, you've got a shot to get all the way to the top. If you can't, if you've got to go back down and retest that bottom, then that's probably it. And you're going to keep on going down from there.
Yeah, and we already saw, like, that's a reversal candle. That's a hammer, okay? Now, usually I like to see my hammers after 4 or 5 days of trend or 4 or 5 candles of trend, but that's a hammer nonetheless. So if that's my Friday candle, I am bullish going into Monday. We will see what Monday brings. And we did pull back to a swing high of mid-January. So it's perfectly reasonable that we are about to go up and go to new new yearly highs here. And we got plenty of momentum. It'll be a while before we hit another 9.
Yep, I agree. Could you pull up the weekly on that?
Yeah, sure. I have it on as a I have it as a cash market.
Yeah, great.
Now the cash market, again, this is the tricky part, right? And this
Yep.
was the big warning. The weekly is running into double moving average resistance. And this is going to be a challenge. It can take us several weeks to break out.
Yeah, that's exactly right. You don't see that on the daily, but when you
Right.
come up to the weekly, you see that the daily range that we just looked at is describing this unbelievable group of moving averages all coming together right above the price, and the price running in and trying to break through and getting rejected, but not getting rejected so badly that it can't try it again and again and again. Now, if we were on a 6 or a 7 or an 8 on the weekly, then I would be more nervous. But your conclusion, Tone, that this could last a short period of time before the pressure builds up again to take it through those moving averages. And if that's the case, then we are going to new highs.
Yeah, and in addition, because I know I want to get to Bitcoin. I don't know if Willy has anything to say on the S&P 500. In addition, this is the 62% Fibonacci line, and that's basically the last straw to reject the price. If we break above this Fibonacci line and above these moving averages, that's it. It's all-time highs. Here we come.
That's the 61.8, right?
Yeah.
Yeah.
Willy, S&P 500 before we go back to Bitcoin?
Yeah, I don't trade anything that doesn't have a blockchain. Doesn't see the funds moving around.
Okay, so let's talk about the weekly chart of Bitcoin. Let's talk about the long-term outlook. I'll pull up some of Willy's work as well. I mean, this is where everything is happening, right? So I want to clean up this chart. It's got too many annotations. I mean, the triangle has been obvious. It'll be there forever. Let me drop all of this stuff. Let me only leave the moving averages. In fact, let me even, I mean, the volume is kind of not really helping right now either. Let me even drop the volume. Let's look at a nice, clean chart before I start drawing some stuff in here. Let's make this big screen. Now, the moving averages are so far apart from each other. I mean, I honestly believe that we can get stuck between these moving averages until they cross. And that may not even happen until the summer. I mean, this is the 50, sorry, that's the 200. So this is the 30 and that's the 50 on the weekly scale. I mean, they're moving down fairly slowly. The price is way overextended based on the intermediate term moving averages. It is being supported by the long-term moving average. I do believe that even if we crash below the long-term moving average, we are due for a significant dead cat bounce. Now, notice what Litecoin did. Look how close Bitcoin is to the bottom, and Litecoin, like what Litecoin has done, Litecoin has made it back to the equivalent of Bitcoin being at $6,000. What do you guys think about that?
I don't think it's got enough strength to hit up into anything more than the high fours. I seriously don't think so. The question in my mind was, will the next level down, which we're in now, will that be the accumulation phase, or will we have a two-phase drop like we saw in 2014? And I'm doing just a lot of research right now on-chain sort of movements and funds to see how that looks compared to the last cycle. And I have to say it's, you know, like some of the data shows that this could hold. It could. Like we had a lot of buying on the way up. I'm just looking at my chart right now. Most of the volume on the way up was all in the 1400 and below, massive swaths of buying. Then nothing to 2200 to 2600, and that was a solid blip. And then we had a little bit of a finger running up in the mid 3000s. Most of it was at 4000, a little bit more than that, and then a little splattering at the 6000. And it turned out that splattering at the 6000 held us for so long. So you think of that as buyers buying in, and then as the sellers come in, there's a lot of trading happening because there was a sort of enough volume to hold that as fair to price discovery. But the moment there's enough sell volume goes and that it comes in and that volume fails, all of those guys that bought in on the way up, they're going to capitulate. And so that happened very sharply to 3,000. And the question is whether or not this will fail on that volume. And I'm comparing that to 2014. And you know what happened in 2014? And what happened in the 2013 was everybody was buying at the 250 range. And then what happened was 250 upwards to 1200, nobody bought. It was just pimples all the way up. And it was driven by Mt. Gox. You know, there was that bot, the Willy bot that, I didn't create it, but that was buying like $1,000 every 10 minutes or so. And it drove the price up 1200. And I'm looking at the volume on the way down, and huge swaths were being sold from 1200 down all the way to 250 because nobody was bought on the way up there. So it was old hands dumping onto new hands coming in, having seen the marketing of this $1,200 explosion. And so what's surprising to me this time is that on our 2017 run up, it was actually the first major bubble that we had solid buying all the way up. It was the most legitimate bubble that Bitcoin's ever had. All the previous bubbles we've had have been scammy, just a whole lot of crap going on. And so the fact that 6,000 held for so long, just on a relatively small finger of volume, now we're at the 3,500 range, and there was much more volume, but I'm also seeing how much is volume going through on the way down, and already were more volume sold than bought. So I don't think it's going to hold, but I don't write it off that it'll hold, that it might, you know, it might hold. I'd give it maybe a 25% chance it'll hold. But I'm with Tyler that this will fail. And some of the new stuff I'm working on is just figuring out what the valuation of this network is based on investment flows, and its EVT price. And right now it's plummeting. Investment flows are saying the price is around the 2,200, and we need all these the price, these multiple lines based on the kind of time frame you measure it on. So you can think of that as multiple moving averages on this price, and they need to converge to find a bottom. All the previous bottoms, they converged, and right now they're not converging, they're like diving and spreading out. So my pick is maybe 2,200. This next finger could support it. And I think that'll hold it, and we might have a little wick down into the 1,700 range, but I don't think the 1,400 will fail. I'm describing a word picture. I'm looking at the visual of the chart right now.
Yeah, so we do have some questions from the chat, and we'll try to get to those. But since you were talking about NVT, Willy, you want me to look at the NVT signal or the NVT ratio? Which one should I pull up?
Gee, I should just really share my screen, eh? Can I do that?
Yeah, you can. Let me.
Can you do it, or?
No, I took my screen share off. Just hit the green suitcase button and then pick your application or.
Sharing my desktop now.
I recommend the application.
Okay, here we
I
go.
recommend the application.
Can you see it?
Yeah, I can, but like
Yeah.
I recommend the application before some of your messages are also displayed publicly on live.
Yeah, I'm at full screen though, eh? Oh, you're not seeing that?
No, I'm seeing it.
Yeah, looks good.
Cool. Right. Yeah, what we're seeing here, like what I was describing earlier, this is essentially on-chain volume profile. Amount of coins being traded at each price point, okay? And greens are the bull runs, the reds are the sell-off on the way down. And you can see with this green here is this bull phase going up here from 2012, going back to 2012. Well, this bull phase started from sub 10. You can see that green volume buying all the way up. We had this finger of solid buying in the 100 to 150 and a little finger up here in the 200-ish. And that was essentially this volume here, right? And then this volume here to here, you have to look at these tiny little darker green splatterings. This is the volume going up on this bull run that took us to $1,200. Then nobody bought. They might have sold, but very few of them bought and took it off the exchange and put it on chain into their wallets. We had no new hodlers coming in here at this point, right? It peaked here, and then you get this red zone. This is all the red volume. Old hands who bought in this zone further down, dumping. And why didn't it crash is because a lot of people knew about Bitcoin at $1,200. Great marketing, right? And so they're coming in and going, oh, it's cheap. It's cheap here. It's cheap here. And it's just old hands dumping. But the thing I find surprising is this tiny splashing of hodler volume buying held this price for so long. And I kind of would have expected that to drive down much quicker. And it's just the marketing, I think, of new people coming in. And then the lighter green is the volume that took us up from this point here in the end of the bear to the 20,000 mark. And you can see this is our first legitimate bull run with solid hodlers actually buying and holding all the way up. And this 6,000 range, this is the finger of price support, or hodlers agreeing on that, taking it onto their wallets. This is old hands dumping their volume. Solid, right? A lot of volume dumping on it. And this is where we are right now, which is around a 50-50. And I suspect that it'll be this finger
one more is coming. It feels like one more is coming.
Yeah. And then what you see with these red lines is the what I call MVT price. MVT price is taking an estimation of what the velocity on chain is, the investor flow, and then mapping that back to price. And there's you have to figure out where, you know, if I'm going to measure the volume going, the investor flow going through, do I take today's value, or do I take 30 days moving average, or do I take over, 200 days moving average of volume to take that snapshot? So these are different snapshots of it, and you'll see they always converge. They converge when the price lines converge. Because in accumulation, this stuff all sort of settles down, and I'm waiting for these lines to compress again.
Gotcha. Anything else you want to show us?
I see that the target prices are dropping right now.
Yeah, they're still declining. Yeah. Those lines are still declining. Anything else you want to show us, Willy, while you have screen share up?
Yeah, no, that'll do. That'll do for now.
All right.
It's you, Tony.
I'm going to grab that back from you. Okay, so there were some questions. So people were asking, Let me grab Twitter in here. Right. So the reason why we were delayed is because someone, you know, tagged me in a dumb Twitter XR, like another XRP army guy. So here, Willie, check out this tweet. So I'll read it for the audio viewers or audio listeners. And this is someone named Hodor, and this is why my time gets so wasted. I've lost track of how many Bitcoin supporters want to ignore its unnecessary reliance on environmentally destructive proof of work mining. It's up to us to make sure that the world knows it, has a chance. Basically, the world is going to die because of Bitcoin mining. And it shows you that Bitcoin is using up 68.81 terawatts of electricity. Ethereum, which has a blockchain that is 100 times bigger than Bitcoin and is grinding to a halt, is 1/3 of Bitcoin's at 20 terawatts. And Ripple is almost non-existent at 0.01. And basically it shows you that Ripple is not a blockchain, which is great. So I had to, of course, I mean, I hate getting tagged in this complete and utter nonsense and stupidity. So here was my retweet explaining to this person why that is. I'll let you guys read it for 1 second, and then I'll read it to the audio listeners. So basically, Ripple is just a shittier version of PayPal. It is the same centralization and censorship as PayPal, with all of the disadvantages of using a useless token. The fact that Ripple uses any electricity at all is a true waste to the environment. Bitcoin is actually innovative because it's trustless and decentralized. So the fact that Ripple is taking up any electricity actually hurts the environment more than the amount of electricity that Bitcoin uses, because Bitcoin gave us innovation. So for another analogy, since Tyler liked my analogy of the crash test dummies for Litecoin, the analogy is this. Bitcoin is the invention of a car to upgrade from horses. Horses use no electricity, no energy. No environment. I mean, it has some environmental impact, but it's different than the car. The car burns fuel. So a car is more environmentally wasteful than a horse. However, a car has revolutionized the world. That's what Bitcoin is. XRP is like a horse saddle with a spike up, you know what, when you sit on it, because it is not innovative at all, and it just makes the current experience of the traditional banking system even stupider and worse. Okay, that's what XRP is, guys. All right, there you go. So the reason why I went to Twitter is I see Tyler laughing.
That's great. I love it. It's a little uncomfortable, but I love it.
So people have been buzzing again over Murat's latest tweet. So I think this is it. I don't know, he tweets a lot. I mean, but he does these fancy charts. I used to do these when I had free time. We'll see how much longer he'll be able to keep up with it. So basically, this is the analogy of where Bitcoin is going. He continues to believe that Bitcoin can stay above 2,000, even though based on his latest chart, where he took the path of the old history of Bitcoin, he compared the current point of Bitcoin right here pretty much to this point over here back in September, which is similar to how I see it. I continue to wait for a pop back to $5,000, and it seems to be elusive. After that, he is now, based on this chart, is looking for around 1,600, which is very, very close to my 1,300 and very, very close to Tyler's 1,000, okay? But I just have a feeling that this bear market is going to last even longer than previously anticipated. People were also talking about his moving averages. I think, and this was the question from the live chat, which is why I'm here. This latest moving average that he has, the lowest one, I believe is, well, where's his legend? I don't see it. So I'm not sure what, oh yeah. It's the 400, it has to be 400, right? I mean, that's the lowest moving average he's got. So that's the 400-day moving average, I guess. And he has us holding the 400-day moving average. Not sure what the significance is. So I wanted to draw my own look. Sorry, guys.
Is that 400 day or 400 week?
This is a week chart, so it has to be 400 week, which is why it only began last year.
Right.
So this is basically a copy of the old data, assuming Bitcoin is going to recreate it. I just think that it's going to be a little bit different this time. And I've been thinking about the longer term outlook. I don't know what you guys think about this chart. I'll let you comment, and then I want to draw in some longer term perspective lines. I wanted to do it on its own show, but maybe I'll do it again on a standalone show with just me to talk about why I think that way.
I love the chart. I think it's fantastic. I love fractals, and I love repetition and similarity and all of the rest of it. I could see the price doing exactly the way it shows there, but I do agree with Tone that to me this is going to be a longer period of time. And I think we get to a longer period of time by breaking down without running back up to that 5,000 area. I think we break down before that, and that guts basically the bullish sentiment. And then when you break down through 3,000, you don't even hold the 22, 24 level. You just keep on going. And the reason I say all of that is because these previous smaller fractals were not hyperwaves. This one is a hyperwave. And a hyperwave returns back to its origin, which is 1,000. And it tries to get there in such a way as to disappoint the most people. And right now, my sense is that most people are looking for a bottom somewhere around 2,500 to the 3,200 level. A lot of people have concluded we've already seen the bottom. And because of that, I'm leaning in the direction of an immediate capitulation right through all support, wicking down, and then spending many, many, many months trying to build confidence again in the project. And I still feel that that confidence is going to come from the differentiation of Bitcoin and all other crypto projects, which will, if not go to zero, a very large percentage of them will. And with each one that does, the confidence will build again for Bitcoin. Because none of that has happened yet, I think that, in fact, just the opposite has happened, like Litecoin, like Ethereum. Ethereum went up 100%, while Bitcoin was basically flat. Litecoin is still in a very strong counter trend move, but Bitcoin isn't. That's telling me that there is still tremendous optimism about the whole space. And I think that is misplaced.
Willie?
Can you hear me?
Yep.
Okay, good. Oh, cool. Just going back with Murad's chart, it's really interesting because I think you were one of the first to talk about 200-week moving average as the bottom. This is way back in the 6,000 days. And the interesting thing is we're being more and more bearish in thinking the 200-week moving average will not hold it. And I liked what Murad did because he started to analyze longer time frame moving averages to find the accumulation bottom. And if you were to pull back that chart to 2009, which you can get on my site, you'll see it carves this really nice arcing, kind of like, I call it the Falcon 9 rocket launch, right? It goes steep and then it curves out along this long arc with ripples, which is our price on top. These little ripples, which is our moon runs, right? And the thing is, as it sort of levels out, these moving averages need to go over longer and longer time frames to meet that what we call log regression. And so that's what he's kind of done, is that he started matching longer and longer time frames to catch the bottom. And so I liked how he did that. I'd say another thing about this is that the timing signature he's got on there, where we hit the accumulation bottom, we have capitulation. You know, I talk to Murad every other day, and we look at the on-chain stuff with David Krill. We've got a whole bunch of analysis on chain. So with that, we can get a timing signature. So I would say, I didn't talk to him about how he came up with this chart, but I would say a lot of that knowledge came into the timing signature on it. And on top of that, he put last cycle's chart and stretched it to that time cycle. So the time cycle I'm quite confident about. I like that. It's almost a little bit too easy for it to play out like last time. The fractals have changed a lot. They're a little bit sharper, a little bit more, I think, hedge fund driven, and less organic. That's all I've got to say about it. But yeah, second half of this year, accumulation bottom, I would concur with that. 2020, next bull, yep. And I don't know where the capitulation is. Maybe in the 1500s. You know, like Tyler is going for the 1000 zone for a flat bottom. I think it's the next rung above at this stage.
All right, so now that we're done with this commentary, I'm gonna draw one of my own real quick. I don't know how much time you guys got. So I need a new clean chart because all my charts are like, just got so much drawn on them. So what I'm gonna do is I'm gonna take this BLX, because it is an index, and I'm gonna make a copy of it. And I'm gonna do this quickly, and then maybe I'll make it fancy, and then maybe I'll publish it on TradingView. So if I make a copy of this, I'm gonna go Bitcoin index weekly. Well, you know what? Maybe I'll just make my life easy. I'll go, oh no, actually it's the ticker is BLX. Bitcoin index W. And this way I can make a copy. There we go. I'm gonna pretty much drop, I wanna drop all the annotations. I just wanna start clean. How do you do that? I think it's this button here. Remove all drawings. Let's dump them all. Okay. I don't need the oscillators. And actually, I literally don't need the oscillators. Let's dump this. Let's dump this. And I have no idea where the right scale came from. I don't even know what it is. I think it's the volume scale. Scales. Style. What's going on? Oh, it might be part of the volume indicator. Maybe I accidentally turned it on. You know what? What if I just dump the volume? Will it go away? Yeah, it went away. Okay. So we'll leave the sequential just for the hell of it. We still have the moving averages. Now, this is the monthly chart. We're going to go to the weekly chart. Okay. Hey, Willie, any chance
You're on a log chart. That's okay.
That's okay. That's okay. It makes me allows me to see it easier. Hey, Willie, any idea when what the latest expectation for the halving is? What day?
I don't have that. Isn't it 2020 somewhere mid-year? Is it?
Yeah,
Or?
but the hash rate dropped because of stupid Bcash and the fact that the price has dropped. Less miners are out there. Let me see. Halving 2020. Last I heard it was going to be in May. Bitcoin halving. Nope, that's Bitcoin. I need the clock.
Yeah, while you're doing that, it's this next halving brings us to the inflation rate below gold, which is a milestone. And as we get closer to 0% inflation, the impact should be a little bit less each time, huh?
Yeah, no, it should. I agree with that. It's going to be interesting. So May 21st, 2020. I just want that as a reference point. So May, June. What do we got here? May here this week, the week of May 18th. So I need this line. I have no idea how to draw horizontal vertical lines. The first time I've ever done it.
Hold shift down.
No, I know that part, but
that's the way you do it.
I have to move it over one, and the arrows aren't helping. So, and not that it matters if I'm off by a week. It doesn't matter. Okay, so there's our halving. Should probably make it red or green. I don't know, whatever you guys like. All right, there's our halving. Just so we have a reference point, okay? So I just did a clean chart for a reason. Look, guys, I still think a major dead cat bounce is in the making, right? And like I said, I think that this bear market is gonna last longer than it should. My ultimate target, as we said, my worst case scenario target is the $1,300 zone. So I do need another reference point here, okay? This is, I mean, we all know that the halving tends to drive up the price. That's no secret, right? And going into the last halving, this was the last halving right here, this big upswing, okay? And the halving actually took place on the back end after the sell-off. Traders were upping each other to buy into the halving, right? So that means I'm anticipating more. So I'm actually going to go backwards here. So this is what I wanted to do on a standalone show. I do anticipate lots of activity of people buying into the halving. But this time, I'm expecting the buying into the halving to take place not 3 months before the halving. Look, the buying FOMO started in May. The halving happened in July, May, June, July, okay, 3 months. This time, I think they're gonna be a little bit smarter. They're gonna wanna up each other. So I'm gonna say 5 to 6 months, okay? So now we take May and we move backwards 5 to 6 months. So now we're talking January or December, right? So I think early in the year, somewhere between December and January, this is when we're gonna start going up, okay? I think this is when we're gonna start going up. Now, does it mean we're gonna hit bottom here? Probably not. I'm going to adjust this arrow, right? But I wanted a frame of reference based on time. I also need to redo my time analysis using cycles and pi. I don't know when the hell I'm gonna find time to do that, but I'm gonna try, okay? Let me make this bigger. So what do I foresee? I still foresee a move to 5,000 as an ultimate dead cat bounce before this shit capitulates, okay? So 5,000 is here. So at some point, I do foresee a move to 5,000. But I also think we need to drop below. I don't think the current move is going to take us into 5,000. Now, the other thing is if we go to 5,000, clearly we would be above the moving averages. So that makes it a little bit problematic here, right? So I'm going to take this 5,000. I'm going to lower it a little bit to here. Hopefully we can, like, it needs to be a real bull trap here, something like this. So this also means that I am anticipating a drop from here down to the $2,900 area. So I foresee a drop to the $2,900 area before a more critical bull move, okay? Probably into this blue moving average. So what we're getting is, I need a circle. I don't have a circle. So what I'm looking at, come on. Ah, it's green. All right, so shoot. Ah, I can't move the damn thing over. There we go. I'm looking at a bull trap here. This is going to be my bull trap. And then I take this, I copy it. Slide it over to here. Oh yeah, it's a log chart, so it'll do that. There we go. And now I just need to color code this into, I guess, red and red. Okay, so this would be that would be the bear trap, and that would be the bull trap, right? So and then this arrow, and I will spend a little more time on this. This is just a rough estimate. This arrow takes us down into what many believe is going to be the ultimate low. And it could be the ultimate low. It absolutely could. This is that high $2,000 range, okay? Takes us to a little dead cat bounce. To prior high, to prior low. Come on. Something like that, okay? And then the big one comes. The one that really destroys a lot of the businesses.
The one that Tyler rubs his hands together on.
So, again, this is just my rough path. Now, huge optimism going into the halving. But I think the halving is going to be a rough environment. I think, how is it going to be different this time? And I don't think it's going to be over.
You're going to go to zero.
Not going to go to zero, but I have a feeling that, like, people are going to be even more demoralized in the near future. I think the halving this time is going to cause some optimism, but it's going to be short-lived. But we are finally going to be able to get out of this. And when it starts to eventually go up, it will go up very, very quickly so that people will not be able to catch up. So we will catch up, but on the back end. So I'm looking at something like this. With this being the halving. Thoughts?
I don't think so. But no, actually, legitimately, I think your you're you know, maybe 5 months before the actual halving event, we will see a climb. Every other time there's been a climb. I don't know if it'll be as strong this time because the inflation rate reduction is much less, but that gives you an idea of upward pressure around the start of next year. So if that's going to frame the time frame for something solid like an inflation rate halving, that's going to give you a solid marker of when buy pressure comes in. And we've got about 3/4 of a year to stem the tide of downward momentum. So that should give us enough of a kick to get us out of this bear market accumulation phase. I think that if you look at Bitcoin, there's hardly ever been a bull run without an accumulation phase. Actually, I'd say none. And so I'm looking for a good 4 to 6 months of accumulation. And that means a flat sort of wiggly phase. And I don't think we have time before this bull impulse from the halvening to go down and stay down in the 1000s for very long if it goes that far. So I think the 2200s will hold, and that'll be the sideways wobble. Whether or not we get a capitulation like last time, I'd add there's a lot of liquidity in the market now compared to last time, so it's not necessarily guaranteed. I kind of think it might happen. It might not be exaggerated as in 2014 when there was bugger all liquidity compared to today. So time-wise, yep. I don't think we'll go up very fast either. We've got all this resistance to smash through, and at these this next wave is going to need a massive amount of money to push it up, and so I think that will take some time as well. I don't think we'll get anywhere near going up fast till 2022. No, sorry, 2021, the year after next year. Next year will be relatively slow. The goal being to clear 20,000 all-time.
Well, Willie, if you look at my chart, right, I have us sandwiched between 3,000 and 1,000 from July of this year up until November of 2020, right? So we are talking a year and a half of consolidation in a $2,000 range.
No, wait, a year and a half? Oh, well, I see. You were counting that. Yeah, okay, I see what you're saying.
Right. So I'm crossing below 3,000 in July of this year. I'm not breaking 3,000 until November, and this was a random November, right? I'm not breaking until the end of 2020. So we're talking a year and a half in a $2,000 range.
So you're saying the bull market kicks in tail end of like fourth quarter of 2020, and that we would call this an accumulation of 1.5 years before that happens. And the halvening didn't kick us out.
However, well, this is the tricky part, right? I think it's going to be debatable. Even if you look at my little, stick figure here, where is the bull market? Is the bull market as of December of this year where the low is going to be made, or is the bull market, October of 2020, or is it the actual breakout point, right? So it depends on what you consider the bull market. I would consider the bull market somewhere in Q4 of 2020.
I'd call the bull market when we break out and start consistently moving up in a channel, and the low point is the start of the accumulation. So there's this phase, bear bull, but I say there's a bear accumulation bull mania before the bear hits.
So are you a little more okay with my chart now that I've scaled it right?
I mean, I like there's enough space there to look like accumulation. I just think that the accumulation is going to be done before that halvening. I think they will start to drive into a bull market before the halvening too. Yeah.
All right, Tyler, your thoughts?
I love the chart. I think that's a very reasonable possibility. I go back to the fundamentals. I look at fundamentals differently than everyone when I'm looking at a chart relative to earlier charts. There's a significant shift in the fundamentals in my thought. Today, we've got 4,000 to 5,000 projects going on. Back before, we had less than 100, meaning on the last fractal. The reason that's very important to me is all of those other projects changed the sentiment of the rest of the world about this project and about the crypto space. And there's no way we can define what that means. All we know is the incredible volume of projects. So when Quadriga happens, when an exchange is closed down, when people aren't sure what's going on with Tether, when the regulators haven't yet even begun going after all the bad actors, on and on and on, none of that was around in any previous movement. Therefore, I think the most important thing that has to happen is the destruction of those, what we call barnacles, before this thing can do anything similar to what it has done before or what has the potential to do in the future. Now, that's a huge assumption on my part, but I believe that it should not be ignored. And because of that, I could easily see what Tone just drew as being a probable outcome based on the past and based on what's about to happen with the halvening. I just believe that there is something different this time, and what is different has to be taken care of in the minds, not of the players in this market, but in everyone else in the world, the other 99%. So what that means to me is something significant has got to happen, or a significant amount of time must take place. So either something almost unbelievable in terms of negativity in the case of prices going from where we are now down to $700 in a week, so that everyone everywhere shuts up about anything to do with crypto for a significant period of time, and a huge percentage of these other projects simply go away. The media will have a field day. Now, is that a probable outcome? No, I don't think it is probable. But I'm trying to think of what else could cause that fundamental shift to take place, where you give the regulators time to actually begin prosecution and begin to not pick off the low-hanging fruit, but go after the big projects, the big boys, and all of a sudden everyone slams their door and runs for the borders. Because that has to happen, in my opinion, if this thing meaning Bitcoin is going to get to a bottom. So this is one very reasonable scenario. I'd like to think about it some more, and I think we should do a full show just on what we're talking about here, because I think it's that important. And unfortunately with that, I've got to run, and this has been great. Willie, thank you so much. Tone, very good show. I can't wait to listen back to it, because I missed a lot of it while I'm sitting here thinking about stuff. But we'll see you guys later.
See you,
Yeah,
Tyler.
thanks, Tyler. Thanks for coming on. Yeah, you're right. You do have to run. Sorry. Yeah, I do want to do a full show on this, so that's going to be coming very, very soon. I also want to publish this on, after I think about it a little more, I want to publish it on TradingView. Thanks, Tyler, and good luck to your workshop at Hyperwave. We'll talk about it on future episodes.
Okay, very good. Thank you, guys.
Bye, guys.
See you, Tyler. Good to see
All right,
you.
Willie.
Hey,
Hey,
Tone, can you zoom that out as far as it goes on that chart, just to see
what,
how that looks against the long range? The BLX right back to 2012, I think it goes back to.
I'm sorry. Wait. Can you back up? Say again.
Can you zoom that chart with the new trace that you've put on, right back to the beginning? So what are you on? 1 week here. So zoom right out and see how that looks. Just want to see it across the long trajectory. Ah, interesting. Yeah.
I really can't move this guy for some. There it is. Okay, I can move it this way. There it is. Okay, here we go.
And where do you think the top will be on this?
I don't. I don't think about where the top will be yet. I have to. I have to wait for the bull market to start.
Yeah. It's not unreasonable looking at that long range. You know, when I look at that, I look at, I superimpose in my mental model kind of the S adoption curve of these, you know, these great technologies rolling in the time frames. And that's what I think drives this. You know, if you draw the arc bottoming on each of the low points, that's the arc I look at is the fundamental price of adoption. Maybe it is a little low, but it's not out of the question. Yeah. But time-wise, yeah, this cycle is going to be longer than the last. Bigger sea of people involved, more capital, slower reactions.
Yeah. So time-wise, you know, what did it take? So if I look at it time-wise, we went from I guess, let's say January 2014 up until, let's say just January of 2016. So exactly 3 years to make it back to the high. So now I have January, again, I'm rounding here, January 2018. And now we're talking, yeah, you know what, man, this might take longer. Maybe it's like this, you know, because the way I had it drawn is going to be at 3 years to make it back to the top. And I have a feeling it's going to be closer to 4, maybe even past 4. So maybe we're not going to go up this quickly. But then again, we may not go straight up either, right? So this is a general up arrow, and this arrow is going to have its own wiggle.
So you see the peaks, the 2011 peak, the 2014-13 peak, each one of these high points at the end of each bull market, you can see how they're getting longer, right?
Right.
And,
no, I agree. I completely. Well, let me clean up this a little bit here.
So that they want to get longer because the participants, the counter participants are getting bigger. And so that's the natural progression. What we have on top of that, I think, is this sort of robotic 4-year halvening that gives it an impulse. And it's almost like 2 waves, you know, a long fetch wave and a short fetch wave superimposing on each other. These impulses are every 4 years, but you get this longer and longer natural cycle of the, you know, just the sea of the market getting bigger. And I think that this is probably the last time the halvening has a significant impact. And it's almost like the time cycle wants to stretch longer, and the halvening being placed where it is rushing it a little bit. Just looking at it. The impulse
would be.
Shove. Yeah.
So I'm gonna play around with this chart slowly. I'm gonna try and, you know, make it think about it some more, do some time analysis in it. There was another good chart using time analysis. I already forgot who did it, but they actually did like a ratio of prior peaks, and it was a pretty good analysis chart of. So I gotta find that chart again. I forgot. Like I said, I forgot who did it. Once I find, I can.
That one was interesting because they did each increment linearly. Like, you know, the first one was like 2 days next was, you know, like say 5 days. I'm doing days instead of years. So that was 2 to 5 was 3, and then the next one was a linear increment. And if you work that out, it doesn't work. It can't continue to linearly increase because, you know, by the 10th cycle, they get like crazy long. And what I think happens is these cycles, as they get bigger and bigger, they tend to increment less and less until the cycles are macro cycles. They're the cycles that the, you know, the world economy cycles on. For that to happen, Bitcoin has to be at the trillions of dollars in a bucket of value as big as, you know, real estate, equities, bonds. Give it 10, 20 years, I think.
Yeah. Oh, and by the way, I honestly don't. I think the next up wave is not going to be that. I honestly don't think we're going to break 50K next time. So I'm going to purposely put this at 47.50.
Still, if your bottom figure is correct, it's a solid gain.
Oh yeah, no, it'll be a good gain. But I think the next top is going to be lower than people expect as well.
Nice. All
right, I think it's time to let you go. You're out in Asia. It's probably like 10, 11 p.m. there.
Yep, 10 p.m. Time to hit the sack pretty soon.
Nice. Yeah, no, I'll see you in Thailand soon. Hey guys, before I go, I'll probably have about 1,200 viewers. I do 1,300 viewers. Hey guys, I know this page is kind of a little, you know, crappy at the moment. It's gonna get so much better, but it is my calendar on tonebase.com, so you can see where I'm going. So you can kidnap me if you like, or take me out for a steak. I prefer the latter. And these dots represent where I'm speaking. And so I will be in Bangkok speaking at Traders Fair. It's a trading conference, not a crypto conference. The following day, I'm teaching a workshop in Bangkok. And if you look at my workshops, you will see that I will be in India, assuming I get my visa done this week, because I'm going there soon. And then I'll be going over to Vienna, and then I'll be going over to Hong Kong. And I'll be teaching workshops in all these places. So check that out. I will be, like I said, I'll be in Bangkok next week. After Bangkok, I'll be meeting up with Willy and Van Zandt to do some work. And we'll bring you more content. And a new conference is coming. I will announce it next week. We will launch the website. It is going to be in Malta. It is going to be in Malta at the end of the first week of April. So don't make too many plans. It'll be great. It's I am working with Adam Back to bring you a really cool conference with a bunch of core developers. Those are pretty much my announcements. Willy, you want to announce anything? We had some questions, nothing really crazy.
I'm pretty usually quite secretive on what I'm working on, apart from when I publicize it. Yeah. But thanks for the opportunity.
All right, man. Hey guys, thank you so much for watching. I think this was I know this was a long video, but it was good to take a look at the price of Bitcoin. I have no idea where it is right now from when we started, but I do see the current bounce as a dead cat bounce. I don't see that much coming out of it. I still see lower prices, and so does Willy, and so does Tyler. And hopefully we will give you another video, another one of these soon. I'll continue working on my long-term view of Bitcoin. I'll think about it some more. And maybe I'll finally publish again on TradingView. I think it's been since 2016 since I've published on there. So maybe I'll do one more. All right, guys. Thank you so much for watching. Willy, thank you so much for joining on this channel. And see you in Thailand soon.
Pleasure to be here. Catch you soon. Bye.
Bye, guys.